This is where it can get messy.
Does that affect your future borrowing with a new partner?
Yeah, it does say the mortgage is $500K. You're liable for the $500K if blah blah stops paying.
I think I was pretty lucky. Shout out to my ex-husband.
Welcome to These Four Walls, the podcast that talks to real buyers and experts about the hardest, weirdest, and most surprising parts of buying and owning a home in Australia. We'll help you figure out what's going on in the world of property and what to do next.
Hey everyone, I'm Nabilah and you're listening to These Four Walls. In today's episode, we talk about what happens when a relationship ends but a mortgage continues. Our guest today, Sam Harvey, a senior mobile broker at Aussie. And we have a listener letter from Toby in Newcastle. Toby says, we bought our first home together in 2023. It was a fixer-upper. And then, out of nowhere, we broke up. It's been 6 months and we still haven't figured out what to do with the house. Do we sell? Do one of us buys the other out? What do we do? Hey, Sam.
Hello.
How are you?
I'm good. How are you?
I'm good. So you've heard that story there.
Yeah, I have.
Is it something you've come across, I'm sure, many times?
Unfortunately, it's not uncommon.
So I personally have gone through this. I got married a couple of years ago. We were together for a while. We got married and then we actually bought a house together.
Yeah.
And I think maybe 6 months after we bought the house, we separated. And I remember the first thing I thought was, what happens now? You know? So tell me, what are your options when you are going through that? What are the options you actually have?
It can be so different for so many different couples and how they navigate it. But the real options, I guess, firstly is, I guess the obvious one is sell the property.
Yeah.
So you can sell. Secondly, you can look to buy one another out of the property if you're in a position to do so.
Yeah.
And then thirdly, depends how amicable as well, right? If it's messy, it can get messy. But if it's amicable and the market's not perfect, or maybe we'll rent it for a period of time, or we'll do this reno, that's a possibility. Maybe we'll keep it as an investment. So really, I've seen so many different ways it's handled depending on the couple.
It's interesting because when I was going through it, I think my partner and I, my ex-partner, I should say, we were both obviously going through the emotional turmoil of a relationship ending. And we were in that part of, do we wait it out, see how we go? Maybe we will get back together, so maybe we keep the property. Do you see co-ownership as much of a thing when this happens?
It really comes down to the individual circumstances and then what you plan to do.
Yeah.
And the family dynamic. You can continue with the property as an investment, for example.
Yeah.
But typically someone's moving out, someone's moving somewhere, right?
True.
So what are we doing? Where are we living? There's so much that comes up. Like I had one lovely couple separated, but market in Sydney was at a downturn.
Yeah.
So let's treat it like an investment. They were amicable enough to do that. They did some renos. They rented it out for a period. The market turned. They sold. They're happy. And both moved on with their lives.
I think I was pretty lucky. Shout out to my ex-husband, who we were super amicable, and
Makes it so
easier.
much
easier. Yeah, for sure.
So much less stress. I mean, still
stressful,
so stressful
as it is. Yeah. So in our situation, he actually decided to buy me out.
Yeah.
So he took over and he refinanced the home loan. And I know it was quite a stressful period for him. And one of the big things is when you're buying a home together, you're both obviously going on the servicing so you can afford the property. Right? The question is, can you then afford the property by yourself?
That's the question.
Yes.
And it's obviously it's down to you and your circumstances at the time. I literally timely have a customer I'm helping right now.
Yeah.
Separation, same situation. We're going through that assessment period now. Can you actually afford this on your own?
Right.
Move back in with family, wants to keep the property. That's the option and the desire.
Yes.
Worst case, it won't.
Yeah.
And the property will need to be sold.
Okay.
Because that's part of the court agreement. A lot of the times with these court agreements, they have a period of time in which they can get themselves organised.
And you mentioned time there, so I wanted to touch on that. Is there a time frame that you have to look into this after a separation? Sooner the better, or
Sooner the better.
Yeah.
Sooner the better.
Yeah.
The main concern I always have with separations is Pay the mortgage.
Yeah, pay the
Pay
mortgage.
the mortgage, especially
Yeah.
if it's messy. Do what you can because it can start to impact you both negatively if you're
Yeah.
not at least on the same page about that. Just cover that as a minimum.
Totally.
Mortgage repayments and the outgoings. Sort the rest of it out afterwards.
Yeah, it's like, hey, I'd like a divorce. By the way, we still need to pay this mortgage. So you pay this much, I pay this
And
much.
like kids add a whole other dynamic to
Yes.
it. Like
I didn't have to go through that.
yeah,
luckily.
so whether who's going to stay in the family home, but it's an interesting thing because they do need to reach out to a broker first because they kind of got to gauge, is it even possible? Like I'm going to start speaking to the right people, but they need to speak with a bunch of people.
A question I remember having when I was going through this, say you do opt out if someone buys someone out. How does that work in terms of, depending on how much deposit you pay, does that person who paid more deposit get more? Or how do you pay that person out based on how you bought the property?
There's a couple of things to cover off here. So it comes down to how you've initially bought the property.
Okay.
Default status is to buy as joint ownership.
50-50.
Yeah, but in some circumstances there might be, and this is definitely the rarer because the default is typically, we just buy together.
Yeah.
And it's not really thought about too much by people, and maybe it should be. With the other way being tenants in common, if that's the way that's drawn up or there is an agreement drawn up ahead of time, then that would need to be taken into account in terms of the split. So it might be percentage based. One partner might have put more money in than the rest, and they would have had that to aid the next part of the discussion.
Makes sense.
But let's just say the most common way is that they've bought it together. It's an emotional time period, but like math is math. You get a valuation done, and typically you'll want to get independent valuations done. Did you get independent
I
valuations
didn't,
done? Interesting.
but I think
How did you come up with a...
I'm pretty sure it was a phone call. He's like, so the property would be roughly valued at this now, and half of that would be this.
Now you're like thinking, should I have my valuation?
And honestly, I was like, sounds good. These are all things I didn't know and are going to be great
Okay.
for our listeners.
I would say if someone who hadn't sought legal advice yet has come to me, I'd be saying, go get some legal advice. Because even if you draw up a financial agreement, you need legal advice to do that. It's the easiest way.
Yeah.
And you want that in place. I've had a friend who got separated. You run a risk not having a financial agreement.
If I was to kind of break it down here, so say you bought a property for $500,000.
Yeah.
So the valuation comes back as $700,000. So it's increased by $200,000 over however long you've held the property for. At point of buying someone else out when it's 50-50, would one partner just have to, whoever's buying the other partner out, have to get a refinance to increase the amount by another 100?
Like typically, because you've got to factor in the equity, right, that you've made in that increase. So you have to pay that other person out. But typically in these separation scenarios, you're considering the whole financial position
yes.
of the couple.
Of course.
So there is that element to it, but then there's also super and
True.
all these other assets that come available. So that might be able to be negotiated as well. But if we're talking just the only asset you had together was the property, then that uplift would need to be split.
Is there anything you can do or any conversations couples going into buying a property you think they should be having before they sign the mortgage papers?
So I would hope that they're financially on the same page before they buy. It is at the end of the day a huge financial commitment you guys are making. If you aren't on the same page, get on the same page. If you need some education or you want to look into like the tenants in common instead of the joint tenants, which you want me to explain that
that would be great.
So like the joint tenants is the common one, and so what happens if one of you passes away, for example, the other one just ends up getting the whole ownership of the property. Yeah. But in examples, there might be a customer who has a huge deposit. They've met their partner. They're putting in a chunk of the deposit. They want more ownership of the property.
Yeah.
So they're wanting to do tenants in common, and that split can be whatever you guys want it to be. There's nothing wrong with putting something in place like that and having those conversations, especially if this person's going to be...
For sure.
You're marrying them.
Exactly.
You want to have these tough conversations
beforehand.
I
don't think anyone ever goes into a marriage or goes into buying a property together with the idea that they're going to break up. So it is something that's hard to have, but the reality is 1 in 3 marriages in Australia break up. Do breakups affect your credit score at all?
They 100% can.
Tell me more.
If it's messy,
Yeah.
please, like I said, please try to make your minimum repayment, because if you don't, then it's going to be impacting your credit score. There's actually lawyers who are recommending not to pay when going through a divorce, like a messy court battle. And I don't think they understand the impact it has to people and their future lending. So I would very, very, very much try to point people not to do that. And look, at some circumstances, some people, they can't control it. They can't afford to meet the repayment. But if that is the circumstance, you stop making the repayment, your partner, ex-partner stops making the payment, and it gets tracked.
Yeah,
permanently.
of course.
And these things, unfortunately we see it, and it impacts future lending.
You can't call them and be like, my ex-husband didn't pay it, so it's actually not my fault. Can you please?
It gets to default stage. Default's the last 5 years. Late payments, this can really start to, because with credit reporting, it gets tracked. So 1 month late, 2 month late, 3 month late. Some lenders auto credit decline. It definitely needs to be explained. So avoid it, obviously, if you can. We do have lenders that can assist people who've had this happen and been in these circumstances. They're specialist lenders. We can look at lending, but typically you'd need to wait at least 6 months, and you'd be looking at higher rates, typically with these specialist lenders.
Whoa. I bet you're stuck on the same old real estate apps.
Yeah.
Try Aussie's new property search. With thousands of listings, even off market.
Ooh. Find your next property with Aussie.
I had a first home buyer who used a guarantor.
Okay.
They used a guarantor to get into the property market, probably about 100%. A year or two later, they separated, and the property market at the time was falling. The Sydney market actually went lower. So they're in a tough position. They can't sell without impacting the guarantee of the parents and putting them in a financial position as well.
Yeah.
That was really tough. But we managed to get a solution with their existing lender. We were able to get the brother to come and replace the partner, redo the guarantee that way. The bank were really accommodating, which was really great. Then the Sydney market did its thing, and they're very happy now. It all worked out. But at the time,
it was stressful.
oh gosh,
Super
can you imagine?
stressful,
That's just something, I guess, to keep in mind with getting guarantor loans. We always advise to get some financial and legal advice around it, and that's probably one of the biggest risks I see around guarantees. But they're a wonderful way to get in the property market.
I was very lucky. We bought a property, and then a year later, it had already increased significantly. We bought it in Brisbane. You know, the market there was booming. Any and all deposit I put in, we obviously made back, and my ex-husband was able to refinance pretty easily. What happens when the property market goes down and your property is actually valued less?
Well, this is why banks typically have these LVRs that they lend to. Definitely could impact the sale of the property, which means you're forced to either sell. You're going to have to arrange something with the bank for sure. It opens a can of worms.
So you're married, Sam.
I am.
Do you recommend couples have separate savings?
I'm going to say something that I don't do. Okay, look, me and my husband share everything, but would I recommend others do that? No. I feel like most people need that little bit of safety net, safety buffer. Look, I've actually been married twice. I knew my ex-husband at the time. He had bad financial habits. I did not feel secure.
Did you know that he had bad financial habits?
Yeah.
Yeah.
Definitely did. I would say for majority of couples, it's best to have your own set of money and then joint money, right?
Yeah.
So you have that own financial security. But the main thing, even if you do everything joint, is you should be 100% across financial position of you as a couple, of you as a household. If you are not, that's alarm bells to me. That's not healthy. That's not right. Because there's usually one person in a relationship who's the finance one.
The finance one, yeah.
That's me.
Perfect.
But my husband's still fully across the decisions. Funny story. I put a lot of documents in front of him sometimes with lending and stuff. And I joked one time, I could sneak a divorce papers and he wouldn't even know.
Sounds like you guys are too comfortable for him to know.
The documents much more closely than he used to.
These Four Walls is brought to you by Aussie.
So Sam, we've talked quite a bit about younger couples or couples who've just bought a property. Tell me a little bit about maybe some of our listeners who've been in a relationship for a much longer time. Maybe they have 2 investment properties together and owner-occupied property together. What happens then?
The benefit that they have is time in market. So there's one less stress in they've typically built up quite a bit of equity. And that puts them in a more favourable position. It follows the same sort of process. At the end of the day, they need to decide how they're going to separate their assets. Are they going to sell, where they're going to live, etc. Seek legal advice, get a financial agreement if it's amicable. Unfortunately, go through the course if it's not. So it follows that process, but there's a lot less stress often around the built-up equity. They both will have, hopefully, a chunky deposit if they do need to purchase again. I had a couple recently. They owned outright. I had the lady from the couple come seeking just a very small loan so that they could rebuy, and then the other partner exactly the same. The thing with investments is it'd be around the division of assets really and coming to that agreement.
For example, a couple have children and maybe they want to keep a property in co-ownership to then pass it on to their kids or have a safety net for them. Does that affect your future borrowing with a new partner?
Yeah, it does. So with co-ownership, we see co-ownership not just in couples but in family members, friends, something they don't consider because they're so focused on that purchase at the time. It does impact future lending. When you're on a loan with someone, that's a joint liability. In the bank's eyes, just because you own 50-50, say the mortgage is $500K, you're liable for the $500K. If blah, blah stops paying, like in a divorce, you're liable. Nearly all lenders will factor in the whole home loan when it comes to your future borrowing, which of course is going to impact you. A handful of lenders have a policy called common debt reducer policy, which is an interesting one, which does allow for the debt to be apportioned with the history. So that's why brokers are amazing.
Love it.
Because you wouldn't know that, and then you would come see a broker and get some advice around that. There's also a unique product called Property Share. So this goes into not just couples, but anyone really buying together.
You were mentioning earlier how important it is to make sure that you're paying your repayments even after separation so that it doesn't affect your credit score, so there aren't any issues. In any situation, if maybe someone isn't able to afford to pay the repayments or any issues like that, can you freeze your repayments? Can you call your bank and explain to them the situation? Will they help you freeze the repayments? And how long might you be able to freeze your repayments for?
So each lender should have a hardship assistance line. That's your first point of call. The options that they usually present, it changes per lender, so I can't really state factually this is what they'll offer, but it could be something like interest-only payments. It could be a pause if you've got evidence, or do you have this property on sale? I've had that before where they've like, okay, we're not going to take any repayments out at all because I can see the sales going through or something like that. So there are different options. It actually still does show on your credit score that you've had an arrangement. And then once you're off it, it'll show back in meeting your repayments more consistently. And ideally, you'll wait about 6 months before coming to future lending. Speak with a broker. We work magic. Circumstances in which we can do better.
If I'm a first home buyer and I've bought a property with a partner, we then separate, say my partner buys me out. Can I then, when I go to maybe 5 years later purchase, am I still available to get the first home buyer? Yeah.
So this might be a little bit tricky, but generally, no, you're not a first home buyer because you co-owned. If your name was never on the title, you weren't ever on the loan, technically you never owned, you got to benefit. But if you are a co-owner, you owned before. Interestingly enough, with one of the schemes we have, their definition of homeowner is different. So the first home guarantee, and if you're out the market, I believe it's 10 years, and they'll reconsider you for that scheme only. But the stamp duties, typically, no.
In the scenario where a couple are together, one partner owns a property, they get together, the other partner starts making repayments for said property. When that relationship breaks up, is the couple who's not on the title still eligible in ownership of that property that they've been making repayments for?
It really would depend. So there's a few things I could mention. Like if you own a property before coming into a relationship and you've agreed and you made that financial agreement up front that what we bring in is okay, then like we're not going to fight over that.
Yeah.
But you had nothing in place and you've been in a de facto or married relationship, not everyone's going to be thinking rationally about these things, right? So it really depends on the individual and the circumstance of the family. So when we couple up and we start a family, one may be paying the mortgage, but the other's raising the kids. If one's on title and one's not, you can't just leave one person.
Yeah.
Be like, hey, too bad. My name's on title, right? You're going to
Totally.
say, hey, that's not cool.
So it can be a difficult conversation to have, but I guess something that's worth having is if you are getting into a relationship where another partner owns a property and you're helping towards the repayments, is it possible to have the conversation of, hey, I'd like to be on the title?
Is it an investment property or is it an owner-occupied property? And what's the benefits in doing so?
Right.
For investments, often couples may want to buy in one person's name. So this is the interesting thing. We might, for a reason, choose to buy a happy couple investments in individual names for varying reasons, being tax benefits, negative gearing.
Right, so I've got a spicy one for you now. What's the biggest mortgage move that you've seen someone make out of pure revenge?
Spicy, yes. Let me think. I mean, the when we say messy, it's messy, right? Like, so people just get vengeful. Like, they just don't want to make repayments, even though it's in their best interest to. They might just go, oh, I don't even care.
Yeah.
I do have an example. The domestic violence. The lady ended up in a shelter house, and he was getting his affairs in order.
Okay.
Way ahead of time.
Yeah.
And it breaks my heart, actually. They had a family too. Like, it's just mind-blowing. But, and this is where the financial education piece, you should be, obviously there's absolutely no blame on her, but you need to be across your finances and see what's going on. This was all being constructed behind the scenes, very high up in his career. So then I think she was looking at getting a forensic accountant. Self-employed people can try to modify how much they're earning when they're going through a battle like this. So, I'm actually not earning anything. The company is, or it's, the money's gone invested everywhere. Like, which is really sad, especially when families are involved, right?
Of course, yeah. I read something once, and it's funny enough, I read it after my divorce, but I really resonated with it. And it said, marry someone who will be easy to divorce.
Oh my God.
And
I love that.
Yeah.
Like, can't you just think of your ex-partners and think, I would not want to divorce them?
Yes. Being with someone who you know, even through a very tumultuous point of their life, like going through divorce, will be calm and level-headed and have your best interest as well. But, you know, both male and female, I think is so important. And I remember reading that at a bookshop, and I thought back, I was like, wow, I feel like I did that, you know, and that's not always the situation.
No, and that's like where I had the different examples of being with different partners. You might have a different sense of security with how you are in that relationship. And like, you can tell with some couples, they will come for it all, you know, like just how they deal with other dealings in life.
Look, there's always bad stories when it comes to emotional breakups and mortgages. Tell me about a time someone's reached out to you and it has all worked out.
I have a story. Obviously, it's still a tough separation story, but this is like one of the highlights of my career. So it really touches my heart. I had a lovely lady, unfortunately, going through separation, and she was on all the benefits you could be on. So like, we're talking child support, family tax, carers allowance. She had 2 young children with disabilities, and that hits home because I have 2 young children with disabilities. So she had seen 2 brokers before who just didn't give her the time of the day with the income that she was on. There was equity built up in the property, and pretty much we were able to keep the family home, because if she had to sell that one, the family home for the kids, like, she's never going to be able to buy. It was in Melbourne. It was a nice big family home. She'd never be able to get back into the market. Like, okay, we'll never say never, but with young special needs children, it's going to be a very big adjustment for some vulnerable people already. So that just that was the highlight of my career, knowing that I've helped a family stay
Yeah,
together, right? So
of
there's definitely
course.
beautiful stories. And that's just pushing the envelope a little bit and really finding lenders and finding solutions for your customers.
Yeah. And finding a broker that cares.
Yeah.
These Four Walls is brought to you by Aussie. Like and subscribe on YouTube, Spotify, and Apple Podcasts for new episodes every week. For more information, see the show notes to this episode or visit aussie.com.au. The information provided during this podcast is for general informational purposes only. Aussie does not provide financial or investment advice. The information in this podcast does not take account of your objectives, financial circumstances, or needs.